Moving on to the next question would be around the digital service tax. I remember you did talk about it, I believe 2021, 2022, how the crypto owners were under the digital service tax. I believe that has changed. You just mentioned the new law. Maybe you can clarify again, how does the digital service tax come into play as well when it comes to crypto?
You know, before 2019, we didn't have a mechanism of taxing any non-resident who is earning from Kenya. So if you had similar services, let's take an easy example. If you had the David Cinemax, where you stream movies for people at a fee, definitely you'll pay your tax to the government. And if it's more than 5 million, you'll also pay VAT. But we also have XYZ who is streaming movies from outside the country, and they were not paying even a shilling. How do you expect David and that XYZ to compete? It was difficult. So to ensure that everybody is treated equally, the law was changed in 2019, but again, more specifically in 2020, so that from January of 2021, even those non-residents were also subject to digital service tax. But digital service tax is very particular on services. We have a positive list, a list of what services are subject to digital services tax. It was not part of that list. Effectively, 1st of July 2021, digital service tax was ring-fenced. I see my network is a bit unstable. Maybe if it's back, you can
yes,
tell me yes?
Yes, the last point I think we missed. Maybe you can repeat that.
Good. So what I was saying is, effectively, 1st July 2021, the law was amended to ring-fence digital service tax to non-residents alone. Okay? So for a resident person, they don't need to have, they have nothing to do with the digital service tax. That's the first line. Two, when you look at, for example, an exchange, remember an exchange has its own income, where they collect commission by people, transacting, crypto traders, ramping and exchanging and transferring and converting, all those processes. Remember, the exchange itself earns from Kenyans, for example, those who have been onboarded on those platforms. So the exchange is offering a digital service, and therefore the exchange has been doing their digital service tax filing and payment, but they have not been collecting the digital asset tax, because the digital asset tax is the tax of the crypto trader, not for the exchange, unless the exchange also does exchanging of the coins, okay, which they own. Then that will then be debatable on whether they are supposed to pay or not. So for the exchange commission, they do digital service tax. In fact, they also collect VAT. They also charge VAT and remit the same to the commissioner. Platform will account for DST, but they'll also account for DAT. But the DAT, the digital asset tax, is not their tax. That is tax of the traders. So that is the interplay between digital service tax and digital asset.